Our topic today is home buying for the first timer. And by the way, if you see over my shoulder here, I guess it's over here, save my contact info if you want to scan that QR code. If you need my contact info, you can certainly get it there. And if you want to schedule a meeting or anything separately, you can certainly email me, text me later. You're happy to do so. So let's get going. So really what I'm going to do is this is really designed for a first-time home buyer. And what I usually say when I do a meeting with a first-time home buyer is I'll say, hey, I certainly want to answer any questions that you have. But often I'll say, if your list is really, really short, that's okay. That's totally fine. And that's actually normal. That I don't expect them to have a lot of questions. And usually I start out and I'll just say, maybe you just like, I don't even know what I need to ask. That's okay too. And by the way, you can certainly throw in questions as we go. There's a chat there. You're welcome to do that. I'll kind of try to field questions here and there as we go. I already had a couple of people said, I know I got a question I want to ask and throw in there. So I'm happy to do that. Well, I'm going to do some screen share as we go through this. And give me 1 minute to get to the right screen. Here we go. So this is something I use a lot with home buyers when we're just kind of looking at different options for them and, helping them understand the process. And I'm going to go over this and just explain the things that I explained to first-time home buyers in this flow chart. And I know it looks a little ominous, and this is not every step, but it's the basics of the home buying process. And it really creates a good discussion point for the various things that are going to happen. So we start over here. Usually a client they may start with me, they might start with their realtor. It really doesn't matter where they start there. Very often, a really good experienced realtor is going to ask a client, hey, have you been pre-approved? Well, if the answer is no, I haven't, then they're usually going to, connect them to me, and I'm going to talk to the client. And then we're going to circle back. A lot of open dialogue there. Now, maybe you've already talked with a realtor, looked at a home or two, and that's okay. Sometimes people just want to kind of see what's out there, but very quickly, you're going to want to get pre-approved so you know for sure what you're qualified for and what your best options are to be able to purchase a home. So what I do is in a pre-qualification, this is the way I usually do it. There's a couple of different avenues for this, is I'm going to talk to the client a little bit on the phone, just get some basic information. We have a website. They can also provide some of that basic information. It's totally free. It doesn't cost them anything, doesn't obligate them to anything either. But that basic information we're going to use, we're going to do some research. And then what I'm going to do is I'm going to be able to circle back to that client with some greater information about their situation. And in that, I'm going to be looking at their credit report, their income, their assets, and then calculating what are called their debt ratios. Well, what I typically do is have that maybe first initial phone call. And then after I've done that research, I'm going to schedule a planning session with them. It could be face-to-face here in my office, or it could be via Zoom. I will admit a phone call can work. It's not optimal because I'm going to have some things I want to show them and explain to them that really seeing it really does help a lot. So that show and tell is super important. Zoom works great. You're in the Metroplex. It's a big city. People are coming from everywhere. So in that Zoom meeting is usually how it is. I'm going to show them that research we did. And through that, ask them some questions and say, hey, based on this, it all looks great. You're pre-approved for up to X, okay? And a payment there would look like about this. How does that fit with your goals? We're going to talk about what are their payment objectives? What is their house price they think they want to do? How much down payment they can do? Those different things are going to come into play, okay? So that's the pre-qualification or pre-approval process. By the way, there is a difference of pre-qualification versus pre-approval. Pre-qualified means that a lender has pulled a credit report and discussed with them their income and their assets, and based on that research is able to determine that a loan is possible. Pre-approval is one step further. It's all those same things of pre-qualification, but it also includes that client providing copies of pay stubs, bank statements, tax returns, the various items that prove the income and the assets. So it takes that a little step further. In this market where it can be competitive for the really good homes, it's important to be pre-approved. Everyone always starts out with pre-qualification. Pre-approval is just simply providing some additional documentation. And then as a lender, I can issue a stronger letter to them and their realtor that says, hey, this borrower is not only pre-qualified, they are pre-approved. I've actually seen evidence of their income and assets, and I know they're good, they're solid. Okay, so that's the difference there. Those usually go hand in hand. All right. So what happens next? Well, they're going to then talk with their realtor more, and they probably have already talked, and by the way, most clients have already done some looking online. That's very normal. That's okay. Maybe they've been looking at realtor.com or Zillow or whatever website they prefer. Well, they're going to probably narrow down with their realtor. What are the specifics they're looking for? What areas? They really want a 3-bedroom, or they're okay to only have a 2-bedroom, or they really have to have a 4-bedroom. They do want a pool, they don't want a pool. What are their different elements that they've got to have or are flexible on? Then what you can expect is that realtor is going to create a search for them in the MLS system of all the homes out there in the marketplace that fit that criteria. By the way, that criteria can change and usually does as a client is going through the home buying process. Let's say that, for example, they go, okay, I want to be in these neighborhoods, I want to be in this price point, and I must have a 4-bedroom house. Let's say 2 homes come up, and maybe they wait a little bit of time, but nothing else is coming up. Well, what does that probably say? Probably they need to modify something. Maybe they need to modify the price they're considering. Maybe they need to go, wow, most of the homes in this area just aren't 4 bedrooms. There's a lot more 3 bedrooms. So they may expand the geography. There may change some other things. But eventually they're going to get with their realtor and they're going to go look at some homes in person. Every once in a while, I will have a client that says, well, gosh, there's so many great resources online. Couldn't you just buy a house without even going to it today? Ooh, the answer is yes, you could. You shouldn't. You shouldn't. There are things that you just can't determine until you actually go to the house. Okay. Things like, what if there was a weird smell in the house? Okay. What if, wow, the pictures that were taken, you can tell, wow, that was a zoom angle lens or a wide angle lens, and the rooms are not quite what you thought. Or, wow, there's some things they took all the pictures of all the good stuff, but there's some things they didn't take pictures of. So you definitely want to go look at the home and get a feel for it. Okay. Now, how long does that looking at homes take? Wow, it can really vary. It can vary dramatically. I would say the average for most clients is their home search is maybe about 2 months, but that does vary dramatically. I've had clients who it was the very first house they looked at. Now, granted, that's not very normal. The more picky that they are, but being picky doesn't make them wrong. It may just mean that they've got more things that they really, really need in a home. Okay. And so they may, realize that there's just different steps that they need to look at and be aware of in that process. Sorry, just a question came in, so I'm just kind of looking over there. So, if they're really, really rigid, they only this area, got to be in this elementary. Yes, it may take a little bit longer in that search. I've had clients that it took a year. Okay, that's not the norm, but it does happen. That's all right. We just hang on to the information, and when the magic house comes up, we're ready to go. Okay. Well, eventually they're going to be ready to make an offer, right? And their realtor will guide them, and you should expect that your realtor will provide what's called a CMA, or a comparative market analysis, that will help you know, is this home priced about right? Is it overpriced, priced too high, or is it priced low? Now, some people go, wow, why would anybody price a home low? Actually, that is a tactic that some listing agents, the listing agent is the one representing the seller, will follow. We see that a lot. Sometimes if a house is just really, really looking great, it's updated really nicely, they know it's going to get a lot of buyer interest, they might purposely price it a little bit low, not because that's the price they expect, but simply because they're like, look, it's going to get multiple offers, bring your best offer. That's okay. Nothing wrong with that. So your realtor's advice is very important here. That's also, by the way, the reason that for most situations, probably 99% of all situations, it's very important to have a realtor on your side. Because some people have said to me, well, maybe I should just call the realtor that's on the sign. That's the listing agent. I'm sure the listing agent would be happy to talk with you. However, that listing agent has signed an agreement with the seller, and they represent the seller first, not you. They are contractually bound to represent the seller first. So it's good to have your own representation in the home buying process. Have your own realtor. Well, eventually you're going to make an offer, and you got to be prepared. It is a competitive market. You might not get the first house you make an offer on. The stronger the offer, the more likely you'll get it. And there's things that we talk about that can help make for a stronger offer. Eventually, and by the way, there may be some negotiation. The seller might say, well, I'm not going to do that, but I'll take this. If you can do that, we'll work it out. And by the way, it's not always just price. Price is always important, of course, but there's other facets of the contract. When is the closing date? Are you going to be able to grant the seller a lease back that lets them stay a little bit longer in the home after the closing? And for some sellers, that's very important. Who's paying for the title policy? This is a cost of home buying. Who's going to pay for a survey? There's various decisions, and your realtor will help guide you there. So it's not just price, but eventually you and a seller are going to land at an agreed upon price, and then you are under contract. Okay, you are under contract. Just when you make the offer, it doesn't mean you're buying the home. You have to reach an executed contract. Now, when you get that executed contract, it's important for you to know as a buyer, there's a phase of time in which you could back out. Okay, it's called an option period. After that option period, it's much harder for you to back out. Okay, you might lose more money. It is important to know that the seller cannot back out on you. Okay, even if another offer came in, if they've signed a contract with you, they cannot accept that other offer. Now, they could put that other offer in a backup position, which would only come into play if you didn't buy their home. Okay, so once you're under contract, here's what's going to begin to happen. You're going to write a couple of checks. Well, really one check that covers two items: earnest money and option fee. Your realtor would guide you about what is the proper amount of earnest money. Typically, I would say on most homes, it's between 1% and 2% of the purchase price. So if it was a $400,000 home, yes, it might be between $4,000 and $8,000. That money goes towards your down payment. You don't lose it. There is a phase of time in which you could get that money back. Okay. The other part of that check is an option fee. It's a smaller check. This varies. I would say most homes, it's probably going to be between low end 300, high end 1,000, but it depends on the purchase price, a lot of variables. Now, that part you don't get back. Okay. Once that seller's accepted an offer and you pay that option fee, it does go towards your down payment, but if you back out, you do lose that. Okay. What you're buying is an option for you to get the home inspected. Okay. Okay. Here's a great question that I need to address. Somebody probably knew where I was going with this. Question is, should I get the home inspected before I make an offer? What a great question. Think about it. And this kind of is logical to a lot of people. If you were going to go buy a car, a used car, let's say, some people say, well, you should take that car to a mechanic and have them look it over before you buy it. So that's kind of what they're thinking about. With a home, no, you should not. Now, let me explain why. While you could get the home inspected, it's very, very unusual to do that and not recommended. You could get the home inspected and be working through that, deciding if you're going to make the offer. And then what if another offer comes in and that seller accepts that offer because you haven't made an offer yet? That could happen. You don't want to do that. What you want to do is you want to get under contract, meaning you've agreed on a price, and make the assumption that the house is okay. All right, just make that assumption. Then once you're under contract, that opens this option period up, which is typically between 5 and 10 days. It could be a little shorter on a very competitive home, but I would say 5 to 10 days is pretty normal. You can get the home inspected. You'll know a lot more about the home. Now, you need to expect with most homes, it's not going to be a perfect report. That's okay. Even a brand new home. I've had clients get brand new homes inspected, and the inspector has found some things that the builder needed to fix. Okay? That kind of thing happens. That's all right. It doesn't mean the house is falling apart. This is where your realtor can guide you and negotiate for those repairs or a credit instead of the seller fixing it, and then you could fix that repair later. A lot more goes into that. Now, all that you want to have happen during the option period. Also, once a client goes under contract, we're going to get a copy of that contract and we're going to review it. We're going to look at all the key parts to the contract, and we're going to meet again with that client, usually in a Zoom, just for time efficiency for everyone. And we're going to look at options of specific to that house, different ways to finance it, and get a kind of a loan plan together. That loan plan can modify as things go forward, but get an initial game plan together for the buying of that home. And some people say, well, didn't we kind of do that in pre-approval? Well, there's a couple of things that I always like to bring up. And actually, this question was asked earlier, and I want to go ahead and address it about, hey, when I make an offer, do I have to decide exactly my down payment at that point? It is a question on the contract. The offer will ask, what are you planning to do for a down payment? Once that contract is accepted, though, if you should change your mind about the down payment, that's okay. That's all right. Now, you can't just unilaterally change the purchase price, but you can adjust your down payment. For example, if you had said in the offer, we're going to do 15% down, 20% down, but then you go through the inspection process and you realize, wow, we really love this home. We love the location, but wow, we're just realizing we would like to do some updating to the kitchen. That's okay. You might want to hold back some cash and take care of those out of cash and maybe just do 10% down, something like that. Okay. So we'll do that during that option period, and then we'll get busy with these steps right here. Now, we usually would already have had copies of pay stubs, bank statements, things like that, but people are always getting new bank statements, getting new pay stubs. That's normal. No problem there. So we'll just get updated income and asset verification. We'll get an appraisal order. The buyer, we get a copy of that appraisal. The loan will go into underwriting. I will always tell clients, if we pre-approved you, don't worry about this. That's just a part of the process, okay? They're just going to look at all the final documentation. We'll get that loan approval, okay? By the way, I usually tell clients, we can modify the plan a little bit as we go. Usually a good time to make any changes is once we've gotten that appraisal. After that, we're pretty much settled on how this is going to look at closing, okay? Once we have that final loan approval, we're going to send closing instructions to the title company. They're going to prepare what's called a closing disclosure, okay? That'll be prepared in conjunction with our company, and that'll be the final numbers as to what you're going to bring to closing. All the final details, cost of insurance, cost of the property taxes, all those little details. There will have been a very close estimate that we will have gone over with the client once they went under contract, but these will be the final numbers because there are some things that are just uncovered as we go through the processing phase. Then the client goes in to a title company. They sign a bunch of papers. Nowadays, we do a thing called a hybrid closing. Part of that is done in an e-sign the morning of closing. It's like DocuSign. And then the physical closing, they actually sign usually just the core documents that need to be signed and notarized. Can't just all be done on DocuSign. There's a lot more. These are big dollars that are being borrowed here. And so they're going to want a literal signature on that closing. At that point, it becomes their home once that loan has funded. Okay. Typically that happens on the day of closing. Sometimes a seller will have arranged, you would know this is going to happen, for what's called a lease back, meaning that yes, the closing took place, but the seller maybe is going to lease back from that new owner, you as the buyer, for a couple of weeks or a month or something like that. There is a cap on it. I know you're buying the house because you want to move into it. I get it. I want you to move into it too. They can't lease back forever, okay, when you're buying it for a primary residence, right? But sometimes that's very helpful. And sometimes that alone, being willing to grant a seller a lease back, can give you the edge among competing offers, okay? And let's see here. Other core questions that I'm just looking at. Down payment, we talked about that. Oh, this is a good one. When do I get the keys? What a great question. So if the house is vacant or there is no lease back, generally you're going to get those keys right shortly after closing. And that would be arranged for by the realtor. I don't have the keys. I'm not given a copy of the keys, but your realtor would arrange to get those to you. And any other, garage door openers or security codes or whatever those might be. Okay. Now, if there's a lease back, it could be a little different arrangement, but you are the owner of the home as of that loan funding. Typically, by the way, from contract to closing, this length of time can vary, but I would say the normal is between 3 and 5 weeks. That's a pretty typical time frame. Okay. Also, this is important to know, especially if you maybe are leasing right now and you're thinking, wow, I've got a lease and I got to time that. So I give notice and all that. Well, bear in mind, you're not going to go under contract and close the next day. There's going to be a phase of time. You're going to know it's coming up because you're doing these other steps along the way. And well, here's the key point where I'm trying to go is, when do you make your first mortgage payment? We talk about this more in depth in our planning session, but let's just make up a hypothetical date. Let's say I had a client closing October 20th. That client will not make a mortgage payment until December 1st. They skip November. Well, that sure does help a lot, because you might begin to give your notice to your apartment or your landlord maybe shortly after or during the option period, once you felt good about, yeah, I'm going to buy this house. That would be a good time to give that notice. So it's very rare that a client will have double payments. And if they do, it's usually just for 1 month. Okay. I hope you find this helpful. Again, if you want to scan this QR code behind me, I'm happy to answer any other questions you might have. You can email me, text me, whatever is best for you. Happy to set up an individual session with you. Let's see here. Other core points. That's really it. There's a lot to it. And in what I do, I really try to emphasize with clients that it's important to kind of understand that process, know what their options are, and really walk them through it, because this is a big deal. These are big dollars. These are big life decisions. They shouldn't be taken lightly. Okay. And so I think it's really important to make sure you understand the process, you know the why behind it to the degree that you want to. Okay. Hey, thanks so much for your time. If I can answer any questions, let me know. Harold Smith. Have a great day. Bye-bye.